What's up, traders? Are you tired of complicated trading strategies that don't just work? You've been trading this strategy for some time and you probably must have blown your account countless number of times, and now you're so frustrated that you're at the point of wanting to give up on your dream of becoming a profitable trader. What if I told you that there are simple, repeatable strategies that you can actually use to consistently make between $50 to $100 per day trading the Volatility 75 index on the Deriv platform? Alright, if this sounds good to you, then stay tuned as I'll be showing you just how you can actually apply these simple strategies to consistently make profit for yourself. Now, the Volatility 75 index is one of the exciting pairs that the Deriv platform has given to us traders. But the problem with this opportunity that many traders are facing is that they complicate a lot of things on the chart. They use different indicators that are not necessary, complicate a lot of theories on the chart, and at the end of the day, they become paralyzed. And the result of this parallelism is the fact that they ended up blowing their account, and they get so frustrated and want to give up. And that's why in this video, I'll be showing you two major simple strategies that you can use consistently to earn you good fortune while trading the Volatility 75 index on the Deriv platform. So if this is your first time of viewing my content, kindly make sure you subscribe to this channel, share this video to others so that they can also learn and benefit from it. Yes, and if you don't have a Deriv account, it will be difficult for you to actually trade this Volatility 75 index. So what you will need to do, you'll be needing a trading account, and I'll put the link for the official Deriv page in the description of this video. So kindly visit the link in the description of the video to set up your account. And if you already have your account, then kudos. We dive into these simple strategies. So I will show you a schematic demonstration of how these strategies work before we dive into the chart and show you how you can apply these strategies for better understanding. There are two major strategies, like I rightly said. The first strategies I want us to look at is what I call the trend flow. Okay, I call it the trend flow. Now, this strategy is very, very simple, and I'm sure you probably might have a bit of an idea regarding this strategy, but maybe you're just missing out some certain things. That is why it is important to stick to the end of this video so that you can learn it properly and then see how your trading journey is going to change from there. So trend flow comprises of trend line, okay, support and resistance, okay. And just to add to trend line, let me put market bias. When I say market bias, I'm talking about overall trend. All right, so these are just the things that we are going to combine to actually have the knowledge of this trend flow strategy. Okay, so this is the first one. I call it trend flow strategy. Okay, so the first thing you need to do is to understand the market bias, which is what you try to figure out the trend of the market. You don't want to do the opposite of what the market is doing currently. So if the market is buying, you want to buy. If the market is selling, you want to sell. So how do you do that? You scale down to your higher time frame, which is your higher time frame could be your daily or your H4. All right, so you go down to any of these time frames to actually check what the market is doing. So if the market is bearish, you will definitely see something that looks like this, some sort of bearish move like this. To apply these strategies, after you must have figured out your market bias, which is to know whether it is bearish or bullish, the next thing you want to do is to scale down towards the 1 hour time frame. Right, when you get down to the 1 hour time frame, what you want to look out for, the first thing is to look out for a trend line, because if the market is bullish, that means the market is actually creating substructures. So in between market range, if I'm using a terminology that you are not familiar with, for example, I just mentioned market range. If you've not heard of market range or you don't know what it is, kindly make sure you visit my previous video to watch some of these terminologies that I've explained in those videos, right? So if the market is bearish and you get down to the 1 hour, remember, for you to have for these strategies to be effective, you want to apply it on the 1 hour time frame, once you have determined your market bias. So you need to see that the market is giving you something like this. Okay, the market is giving you something like this. This is what you're seeing on the 1 hour time frame. Now the next thing is you try to draw your trend line. And when drawing your trend line, I'm just going to explain what you need to pay attention to. If you want to draw your trend line, one of the things you need to pay attention to is the number of touches. Now, you need to have at least 2 major touches before you can be certain to wait out for the third touch. So we have the first one, you have the second one, and the third one will be your target. You are targeting the third touch. So you have to be very, very patient, irrespective of what market is doing, until the market gives this retracement to this point for the third touch, right? So this is the third touch. Now, when the market make this third touch, that doesn't mean you should start selling, right? You need to apply this support or resistance. So you are going to look out for a region which could be a support or resistance level. Since we are looking out for a sell, we will be looking out for what? A resistance level around here. And these are just areas where market is making, is changing direction when they come in contact with the zone. Okay, now you can see that you have your first touch, your second touch, and your third touch. Now your third touch is in alignment with what? A resistance zone. So now you have your market buyer, which is bearish. You'll be able to spot a valid trend line. Now you'll be able to spot what? Your resistance, because we are looking out for what? A sell. Now, what else are you waiting for? You want to see candle confirmation. That is the last one before making your entry. Confirmation. Yeah. So the moment you see your candle confirmation here, and for your candle confirmation, I recommend for a sell, I recommend evening star. For a sell, I recommend evening star, the likes of shooting star. Shooting star is the opposite of hammer candle, or some persons may call it inverted hammer, or bearish engulfing. Bearish engulfing candle. So these are the 3 major candlesticks that I want to see inside this box. The market must react. Either it is rejecting from touching this trend line and this zone together, and once you have that, you can make out for what? You can make your entry. So the moment you enter the market, this low supposed to be your target. Okay, you target this low as your take profit level. So you can see that it is pretty simple. You just need to check whether the market is bearish, and once the market is bearish, you want to actually look out for what? Your trend line. Once you spot your trend line, look out for what? A resistance level. If you are looking out for a sell, you look out for a resistance level that will be in alignment with the third touch. So once you've done that, just wait, be patient for your candle confirmation. For those who might want to use pending order, yes, you can actually use pending order, but me personally, I prefer to wait for my confirmation before making any trade entry. So once you enter here, your nearest low should be your target, or you may not necessarily wait for the nearest low. You can just target 1:3 RR and you're good to go. So that is that about the trend flow strategy for a sell. So now that we are looking out for a buying market, that means that when you go to the daily time frame or H4, you're seeing a structure that tells you that this market is actually bullish. So once you've done that, you come down to the 1 hour time frame. Remember, for efficiency, you must apply this strategy on the 1 hour time frame. So you want to see something that looks like this. Okay. Now, once you've done this, the next thing is what? Your trend line. You've gotten our bias to be what? Bullish. Now, the next thing we are looking at is what? Trend line, which is try to join at least 2 major points. This is the first one. This is the second one. Now, we are looking out for what? The third one. So you need to be very, very patient until price, give you that third touch. Now, when the market make this third touch, which is your major area of concern, you now want to what? Look out for a support this time around, because we are looking out for what? A buy. So we want to look out for a support that can be in alignment, a support region. It's a region, it's not just a point. So that means you can have different area along this line where market is, changing direction from. So you want to look out for a support level here. And you can see the moment you've been able to do that, the next one is what? Candle confirmations. Once price is touching this and you've been able to spot a good support level here, the next one is candle confirmation. Now, what are the type of candles I'm recommending for a buying market? I want to look at Morningstar, the likes of hammer, or mostly rejection candle, and we can also use bullish engulfing. Yeah, so basically these are the candlesticks that I actually use, but most importantly I pay more attention to morning star and evening star, and then rejection candle. So once you have your confirmation, you can actually make your trade entry from here after confirmation, then entry. And if you are entering from here, you want to target this high. So this high becomes what? Your TP. Okay? So that is basically all about the trade flow strategy. Okay, so if you're enjoying this video and you've not subscribed to my channel, you need to follow up with me by subscribing to this channel, so that when we drop other educative content like this, you will not miss out. So what is the second strategy? I believe this is pretty clear. Well, I will show a chart demonstration of this strategy so that you can also apply it and then use it to actually make some money for yourself. So the second strategies I want us to look at is what I call the liquidity trading strategy. Okay, a liquidity trading strategy. All right, so we're going to look at the second strategy, which is what? Liquidity trading strategy. Liquidity trading strategy. Now, what are the things that these strategies entails? Number one, talks about market structure. Number two, talks about liquidity. Number three, talks about POI. Number four, talks about entry confirmation. Okay, so these are the four major items that this strategies entails. So what I mean by market structure is just simply your ability to be able to tell where price is coming from and where price is going to. It's just for you to determine the overall trend of the market, because your aim is to trade alongside with what? Market trend. Is to trade alongside with what? Market trend. So once you've done that, you need to be able to spot your liquidity. You need to have a good or valid POI, and also you need a good entry confirmation. So how does it work? Now, if you're looking out for a buy, there are two setups you want to look out for. Please, I'll need to clean up some of these things so that I'll have time, space to show you the schematic. So if I'm looking out for a buy, you want to see something that looks like this. 1 or 2. Okay, want to see this structure. Now, irrespective of the structures that you're looking, if you're looking out for a buy, that means that your market trend, which is your knowledge of market structure. If you don't understand anything about market structure, if you're a total beginner, ensure you go to my previous video. There are videos there that explain both basic market structure and the advanced market structure. So once you've been able to identify that the market is bullish, now we are talking about a bullish market. Once you've been able to identify that the market is bullish, where can you apply this liquidity trading strategy? You can use either H1 or 15 minutes. Okay, you can use any of these time frames for what? For this strategy. So you've been able to identify that what market is bullish. The next thing is to spot your liquidity. Now, when you have a structures like this, what do you want to mark as your liquidity? This zone here represents your liquidity. One thing about liquidity is you must have at the back of your mind is liquidity must be taken. Liquidity must be swept. Liquidity is just like a fuel that moves your car. So it's more like the engine that drives a particular system. So it's money in circulation. So you need price to actually come down and take out this liquidity. Then where is your POI? The area I use as my POI basically is an order block around this region. There is always a sort of order block around here. Okay, I will mark out the order block and then allow price to come into the block. Now, when price come into the block, for marking this, we already have our liquidity. And for marking this order block, we already have what? Our POI. Now, the next thing is what? Entry confirmation. So you need to have some sort of candle confirmation, which I've actually explained. The likes of, since we are looking out for a buy, we are going to be considering the likes of hammer candle, morning star, bullish engulfing candle, and all that. So you wait for market to give you a sort of reactions around here, probably some sort of rejection candles like this, and then after your candle confirmation, you have your entry from this block. Okay, so and when you make your entry from here, like I said, you can always target this zone as your TP, or use 1:3 RR if you don't have the patience to wait. If you're targeting this, maybe it might take a longer time, but if you're using 3 RR, you will definitely probably get your TP hits. So it just depends on your patience level. So when you enter from here, you target this zone, or use what? 1:3 RR. Okay, you can use 1:3 RR. So this is how you apply these simple strategies. The strategies comprises of what? Your liquidity and just break of structure, showing you sign of bullish momentum. Now you might be wondering, what's the difference between this shape and this shape? It's the same thing. The most important thing you need to look out for is your what? Your liquidity. Very, very important. Now, when you spot your liquidity, the difference here is we have two break of structure, which is 1 and 2, but here we have one break of structure, which is 1. So this one is actually more stronger than this, but it doesn't mean you cannot trade this one. I trade both of them, and I trade both of them equally. I don't give preference to any of this shape. So if you have this, which is just one break of structure, this line also represents your liquidity, and you will always have this order block or a demand candle. I hope by now you all should be able to tell that a bearish order block is a demand candle, and a bullish order block is a demand candle, and a bearish order block is a supply candle. So you want to wait for price to retrace to this box and give you confirmation inside your POI, and you can target 1:3 RR. So I hope that is taken. I hope you understood the explanation which I've made so far. So that is that if you're looking out for a buying market. So let me explain if you are looking out for a selling market. Suppose you go to your higher time frame and you notice that the market is no longer bullish but bearish. So what do you do? How do you go about applying this liquidity strategy? The same pattern, but then once you've done this on the higher time frame, remember it has to be daily or H4. Okay, so you should determine whether the market is bearish or bullish on the daily or H4. Once you've done that, come down to either 15 minutes, 1 hour, or 15 minutes. Okay, and you will be able to see a structure that looks like this, or a structure that looks like this. Okay, just like we have two in the case of a bullish, a buying market. So this is a bearish market. You want to look out for this structure. Now, you've determined your market trend. Now your liquidity is here. The next thing is your POI, which is an order block around here. Remember what I told you, that a bearish order block is a supply candle. And the market needs to say, I don't want to go into details to start explaining so many theories, but I just want you to have this shape at the back of your mind. It's very, very important. This is nothing but a sweep of a previous high, a break of structure. Markets decide to continue by giving us two break of structure. Now, this tip is a liquidity. Liquidity needs to be taken out, because it's just like you have been working and working and working. At some point, you will need to eat to refill your lost strength. That is what the market is doing. The market has been moving. You will need to branch somewhere to eat by taking out, because these things are actually people's stop losses. These are people's stop losses. It will take out these people's stop loss and then give you confirmation here, and you make your entry, and you can target this as your take profit. And remember what I said, that you should always focus on 1:3 RR. Very, very simple. The same thing is happening here. Here we have two break of structure. Here we have just one, which is this. But the same pattern is what you follow. You identify this is the sweep of a previous high, right? And this becomes your liquidity, and you mark out your POI, which is what a supply candle, or you call it a bearish order block. And what do you want to do? You want to be patient until price return to this zone, give you some sort of confirmation inside your POI. And once that happens, you can decide to make your entry and expect the market to rally to the downside to target your 1:3 RR. So this is what these two strategies explain. It is pretty simple. All you need to do is to have this image in your head, go to your chart and look at where this market is actually, where these shape are actually forming on your chart, and then see how you can apply them. So let's dive into the chart. Let me explain how you can properly apply all these things I've explained to you on your chart. So stick with us, guys.
So guys, here is the chart of volatility 75 index, and we want to see how we can apply what we have learned on the chart. All right, so I'm just going to show a demonstration of the two strategies on this chart right now. Okay, and remember what I said, that for you to effectively make use of these strategies, if you don't have a trading account yet with Deriv, you will need to do so by clicking the link in the description of this video to set up your account. Then come back to this strategy to see how you can make money for yourself. All right, the first strategy we've learned is the trend flow strategy. And like I said, the trend flow strategy comprises of what? Trend, then trend line, and then support and resistance. So basically, the first thing we want to do from what we've learned is what? To determine the market bias. And from what we are looking at here, we can clearly see that price is bearish. All right, you can see that market has, make a switch from here to, after taking out, this was a previous high, a low, a new higher high, right? Price made a change of character, and it has been breaking multiple structure to the downward direction. You can see price is trending to the downward direction. This is the daily time frame. That is why I told you that if you want to determine your market bias, you should always scale down towards, scale up to the higher time frame to know where price is coming from and where price is heading to. So basically, market is very, very bearish. So now that we've seen that market is bearish, what do we want to do? We've clearly stated that for us to effectively make use of these strategies, we should apply it on what? The 1 hour time frame. So I'm just going to go to the 1 hour time frame and then try to see areas where these strategies can be applied on our chart. Okay, so let's see how let's see where we can apply these strategies. Let's see. Okay, I think we don't have much information here again. So let's see. The first thing we want to do is to draw our trend line. Okay, and the trend line we are looking out for, we are just looking out for areas where we can get at least two touches. Okay, we're looking for area where we can get at least two touches, two perfect touch, and the third one becomes our entry point. So right now we have here we have here our first touch. Okay, we have here our first touch. We have here, let me expand this so that, so this is our first touch, and we have our second touch here. Okay, we have our second touch here, and this right here is our third touch. And remember, the moment we spot our third touch, what do we want to do? The next thing is to look out for what? The resistance level, because we've seen the market is bearish, so we will be looking out for what? Resistance. So, and if you look at this region here, right, you will see that these are region where price is making the changing direction from. Immediately price reacted to this bulk, we have a bit of consolidation, market sold down, it broke it to the upside, came back, reacted to it. So this is a very strong zone, and it's in confluence with what? This particular trend line, which is what? Our third touch. And our third touch is what? Our entry zone. So we want to look out for what? Confirmation candle here. We want to look out for confirmation candle here, and we'll enter. So let me zoom out and see what's happened inside this box. I gave a couple of candles that you can actually look out for. I talked about the like of rejection candles. You can see we have this rejection candle and we have this bearish engulfing. So these are candle confirmation. You see that it was a perfect reaction from that trend line, which is in confluence with what? The resistance zone. Okay, so you can make your entry here, and if you are entering from this region, where are you targeting? Your target should always be maybe 1:3. Let's check if we can get 1:3 entering from here. So if you are entering from this zone, your stop loss is just going to be above this level. And let's say, of course, this is already, you can target this low, which is already above 1:3. So you would have smashed TP, making this trade entry. So let's look at another angle where we can also get the trend line and see if it's going to work. All that is needed is what? You pick up your trend line and try to see if you can get areas that aligns. Yeah, this one is very, very perfect. In fact, you can even make multiple entries here. So this is the first one right here. Okay, we have the first one here. All right, that is our first touch. This is our first touch, and our second touch is here. This is our second touch, and our third touch is here. So you can see we have our first touch, second touch, and third touch. All right. So this area here becomes what? Our point of interest. Now we want to look out for a sort of resistance. Once you will notice is that there are always they are always happening at that region where price is reacting from. Do you see that we have another solid resistance level? Look at how market is reacting from that zone. See, market reacted from here, sold all the way down, reacted from here, sold again, and you see multiple times. And now market is now reacting from that same level. So this area here becomes our third point. You can call it our third slash what? Entry point. Okay, they become our entry point. So you once you've seen your confirmation, the next thing is what? You enter and you see how the candles are reacting. You see how the candles are reacting. So it is pretty simple. All you just need to do is to spot this thing, learn how you can draw this trend line, which is pretty simple. You target this particular low, right? And you see whether you will be able to, your stop loss should not be too tight. I think this makes sense already. You see, this is, if you're targeting this particular low, remember what I say, you can target 1:3 or this low if you can hold for long. If you can hold for long, you can target this. Now, this is already 1:6 RR. Okay. Now, if you smash TP here and you want to make another entry, you can always do that. Now, if you enter from here, if you enter from this point, you can also target this. You can also target this level. Okay. You can also target this level. So this would have been one TP. You entering from here again. You entering from here again. Now, before you enter from here, because this is another touch, check out for, but I don't really advise, just make for you to avoid over trading. Once you've made your first trade and you've smashed your TP, I don't think it's actually necessary for you to make trade entry again. But nevertheless, if you've gained experience and you feel like you can always look out for more opportunities to make further entries on the chart, you can always do that. And you can probably enter from here or from here and target this low. If you have done that, you probably would have smashed another TP again. Because if you're entering from any of this level and you're targeting this zone, you would have smashed another TP. Your stop loss will not be too tight and not too wide. So this is already 1:4. You can see that to do 1:3 trading this strategy is very, very simple. Okay. Now let's look at another one. You see, all you just need to do is to learn how you can draw your trend line. You just have to learn how you can draw trend line. Okay. If it's not touching, there's no point of you forcing it. But you will definitely see those touches. You will definitely see them touching the line. Do you see? This is one touch, second touch, and then the third touch, right? And you see what happened after the third touch. It sold all the way down. You would have made another TP. You would have smashed another TP because this move right here. If you enter from this zone, if you enter from this zone and you are targeting here, let's check how many RR. You see, 1:3. Pretty simple. You see, this is 1:3, risk to reward 1:3.3. So it is very, very easy. Now, this is the current market analysis that I have just done. You see, this one will give you clarity. All these ones are the ones that have played out, but this one is yet to play out. So look at this. You see, we've had our first touch. You can see that I've labeled them perfectly well to avoid any sort of confusion. We had our first touch, we had our second touch, and then the third touch, which is what I've been able to identify what a resistant level. So what am I waiting for price to do? I am waiting for price to give me this move to this box and then produce some sort of candle confirmation, and I will make my trade entry from here and target this low. So this is now a live chart analysis. Okay, so I believe this strategy is simple enough to make you consistent profit. And if you like this video, ensure you hit the like button, subscribe if you are yet to subscribe to the channel, and don't forget to join our Telegram channel where we drop free signals and a lot of educative content there as well. So like I said, if you don't have an account yet, for you to be able to trade Volatility 75 index, you will need to create an account with the regulated broker, which is the Deriv broker. Like I said, the official link is in the description of the video. So kindly visit the link to set up your account. And that is all. All right.